Hello Market Club members and traders everywhere. Adam Hewison here, co-founder of Market Club and the president of INO.com with your update for the 28th of April. Yep. Well, the markets have really been indecisive in terms of where they're going, the major indices, but look at these stocks here. Look at this, the Amazon. This is like the pride and joy of Jeff Bezos. This is the one that was a juggernaut, but look, we've come down from over $400, just cracking the $300 level today. These are the Fibonacci levels we put in last Friday to show you where this market could go, and of course we're very close to the 50% level right here, and the 61% level at 257 is not that far away. Let's see how that progresses, but the trend is clearly down with our 100% negative reading on the stock. You can also look to see what's happened with the breakdown right here when you saw the market go below 50 here, and again you can see it was right here and right here again. This is another area it went below. So we are getting to the oversold area, which is not unheard of, but it can still go lower than where we are right now, so pay close attention to that, but it's not going to turn around anytime soon. On the opposite side of the ledger we have Apple, which of course is a bull market right now. You can see our weekly kicked in here. Our monthly's been long since 465. We're currently trading at 589, new highs for this move. Still a long way from $700, but certainly the trend continues to be positive in there. And now we've cleared the highs in December. It looks very, very positive for the stock. So there you have Apple going up, which is about 8%, 9% of the Nasdaq, and you have Amazon going just the reverse. So let's take a look at the major indices right now. Looking at the Dow actually started out, let's get closer in here. You can see it's just very, very choppy. We showed you it's at minus 50, a trading range. The long-term monthly's up, weekly down, daily down. This means we could just chop around for a while, but it looks to me potentially like we could be seeing a major sort of top where in this market where we're sort of just kind of like just making this sort of big rounding top. A lot of things. Now if we went through this level, this resistance level, I'd have to say this is very, very bullish, but the reality is it seems like it's rolling over once again, and these are the levels to look at right now, I think, in the Dow. I would say the 16,000 level would definitely be an area of concern. If we go through that, then I think we'll see a lot more pressure and a move down to the February lows. The Nasdaq, much the same there. It's negative. It's below. You can see it's below the 50 line, which is not a good sign for this index. I think we'll see this market continue to evaporate to the downside. On the S&P 500 cash, you can see we had a little rally going early in the day, collapsed, came back down. We're very close to breaking below this 50 line, and if it does that, I think you'll have to be very, very careful because this market could move down pretty quickly. Key level to watch here definitely has got to be these lows right around, I would say right around the 1814 level, 1800 level on the downside. If it goes below there, then you've got what we consider to be a pretty much of a top in place, and you could see a move, I would say probably down to this level, even the low is 1740. This is crude oil, much the same pattern there, just sort of hasn't gone anywhere. It looks like it's trying to regroup. It is below the 50 line, indicating we may see some weakness. We're out of this market because, as you know, we use the weekly for trend and the daily for timing. With a red daily, it means we're out of the market on the sidelines, and with a plus 55 position means it's in a trading range, so be careful there. Next up is spot gold. You can see we've had some pullback in spot gold today. This market's just beginning to try to make a base. You can see it touched the 50 line, backed off again. If it goes through the 50 line, that's a big good indication, but the only one we're waiting for, only trade triangle, is the weekly to turn green. When that happens, you'll see this market really take off to the upside. Minus 55, it's a trading range. On the euro, pretty much a flat market. Sort of surprising because you'd think with all the problems in Europe with Ukraine, this euro will be under pressure, but it's really holding remarkably well. And if you just put a close-only chart, you can see it's sort of flat here. It's actually trying to trend higher, and the longer-term trend's positive. The weekly is negative, minus 65, trading range. Be careful. We are over the 50 level, indicating that we probably favors the upside at this point in time. So, but be careful in all these markets. They're very choppy, and trading ranges, and protect your capital at all costs. I'm Adam Hewison for Market Club. Thanks for watching, and every success using our service. I'll see you soon.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.